Welcome to TradeTheMBI.com. This is John. This report is for the 31st of July. Back on the big system here in Florence now. It's warm, but then again, it's summertime, and that's what you expected. In summertime, sometimes things get overheated. We see the market a little overheated here when we look down here at the D Omega here. We got above the plus 13.5 DOC spread at the same time, but we do have a reset of the steel, which is positive from a turnaround standpoint. Now, we've hit the ABM yellow and moved back up above it. Are we likely to see a little more weakness from this? Actually, this looks pretty decent from a return standpoint. We dipped below the negative 50 line right here, 45 actually, for the extreme histogram, but we didn't go below red, so it's not like we got into a situation where there was heavy distribution. We got into what literally just happens as a positive move. Last time it happened was right here. We ended up with a little dip and then immediately turned around, filled it in a little bit, but then took off for this latest run, and that's fine. We needed to see a little easing off in the fact that we've got the little green reset here and a little bit for the red. Now, does that mean that we're not going to see a little bit more weakness with this? The potential's there. We're now below the 13.5, so we don't have to get that. When we look at it from even a broader standpoint, I was talking about this in my renewal email, where do we go from here? We've reached the target. 25.50 is the next upside, which is actually 25.60, but it's easier to round to the closer number. But that's still another, hefty chunk away, another 80, 90 points. We're not seeing a reading right here that's going to give us that at this particular time. We look at it also from a bigger time standpoint. Things are a little overbought from that standpoint. We may need a little more pull back into this to get a reset. What I'm going to be watching here, and everyone should be watching as well on the shakeout, whether or not we move to zero or go negative to zero. If we stay above it on the positive side and then turn around with a higher shakeout, then we should be off to that upside. Not quite ready for that yet. We're about to see some of the little crossovers that could indicate more sideways action. I don't think that even if we get anything, the likelihood is, well, we have the positive extreme from when this breakout took place, which is right up here in the 42 range, which would be to some like, the end of the world. We haven't seen a major 30-point decline in quite a while since, well, back over here before the breakout last time we had. In fact, the move above 13.5, well, it was actually right about there it started, and then it precipitated a little bit more with the weakness on the shorts here with the cyan. And that's kind of what we're seeing here. They haven't quite broken that 7.5. If they did that, that would be a strong indication that the shorts were really galvanizing into the situation. But they got burned the last time they did it, and it's not unlikely that they will get burned. There's nothing catastrophic. The healthcare thing, Congress not moving, is actually a positive, particularly with the regulation breakdown that's taking place. So we also saw some fairly decent GDP numbers coming out. Is it enough to push us over that bigger threshold of the 3% in growth and stuff? Probably not, simply because you still have a lot of Obamacare taxes and headwinds that really pull on employment and prevent employers from really taking a bigger jump into full-time worker status. So there's still some drawbacks, but that's always going to be the case, and this is why we know we have to navigate what is. And right now, what is we're holding on, and there's no likelihood that we're going to see a precipitous fall apart at any given moment here on the ES, at least right now. But it's not a strong chart by any stretch of the imagination, and we all know that. So cautious, but still, upside still has the advantage, I believe, in this particular case. Also, we have here the NQ. A similar breakdown, a little bit more severe. It came all the way down to the green ABM. And clear, this is why we have that indication from the orange. It really gives us a clear idea when weakness abounds. And you can see the difference here is it did dip below. And so there was a bit more distribution going on in the NASDAQ, some of the tech heavy. It came back into that and then did the exact same thing, retesting that as support, and sure enough, responded beautifully. So this is what you want to see in a healthy pullback, if there's such a thing. And this is really what's buoying the market right here, in continuation of the euro. The fact that the U.S. looks incapable of improving its situation has just driven the euro in a magnificent move. We saw it building way back down here at 106. No way to believe that it was going to rise this fast, this quickly, but definitely we had the buy set up going into it, and it's just been a long-term run straight up. This is going to start to put a damper on a couple of little things like travel and stuff like that, but from an S&P standpoint, as far as earnings, it's really going to be great bolster, because back when they were up at these numbers, they were reporting big numbers, and that's what led to the last big rally that we had, taking us from the 1800 range all the way up. So it's been a while that the euro's been under strain, and the odd thing is nothing has improved about the European zone whatsoever. This is just about retracing on the dollar. And bonds, I still don't see where that's supposed to give us any encouragement. That signal from the short there, we've gotten to oversold, but hasn't quite turned around completely yet. I would definitely still look for that to break a little bit lower and probably even come back down and fill that 120 range, though it doesn't have to. I mean, we've filled in all the positive extremes that existed from before. Where we got to the peak there, actually it was just before the peak we had the warning right here. And then you have one more day. And that's what I love about it gives you the advanced warning, lets you know that, yeah, gotta pay attention. And oil, nice run for oil. Gonna be short-lived though. I mean, you can already tell with the positive extremes. Dip below the red line back here, that's gotta be revisited. Supplies are still going to continue to be a problem, and as price rises like this, it becomes too easy for them to turn the spigot on, and then we get these massive inventories and everybody goes the exact opposite direction, which is perfect trade though. You go up with it, you go back down with it. You go up with it, go back down with it. I mean, that's what we're here for. And gold, we've liked it all the way from this bottom move down here when we dipped below the red line on the orange at the number 2 came in, and it's just been a solid win all the way around, and it's not going to stop. So no objection to that. That's a little too tight. Let's open that up a little bit here. In the last couple of days, so we had this nice little decline, got bought back up. We've consolidated about the 50% level, and I would expect that anything above, again, this was the talk where we were right around that 2460, 2455 being below that. I would think you'd have to be really concerned that you could have further breakdown. And as soon as we got right down, there was a little bit of drag through, but it came right back above it. And you'll notice that if I put myself right around that 2460, it would stay just above it. Nice and convenient. How it's such a wild guess that we would get that range, but that's okay. As long as we're right in this range, nothing to be concerned about. We're going to continue to get the buy signals with the dips below the orange. It happened nice here. It's interesting because you get the crossover, you're like, oh, there should be a turnaround, then nothing's happening. And finally that orange comes down and said, okay, now I can start to expect my breakout, and then sure enough, that's what you get. I've been tinkering with the ABMs and that, and a couple of great suggestions from a member and that on some opportunities to make a few adjustments, and I may even specialize it for the type of chart that he was suggesting, which was a Renko chart. That way it doesn't interfere with the traditional either tick or regular time charts, because it's a little bit more specialized way of charting. Needless to say, though, it should still just be just as effective. So you can see from the 5K, we got a little overbought going into the end day. We might see some flatness in that as we start out the Asian Open, Hong Kong, in just a little while. So I wanted to get this out before that begins. As always, though, continue to look for me on the Skype chat back at the home base. I'll make them so love the European hours. It's so much nicer than heading to LA when I was getting up at 6 a.m. to be ready by 6:30. It was crazy. This is much easier, so happy to be back and have all the regular equipment in front of me. Makes it much easier to do things. So excited about getting some of these additional updates that I've been working on when I was in LA and finalizing them to get them out to you. So at the end of, before the end of the close on Monday, I'll be sending out the indicators. As always, though, trade well. We'll talk again later.